Joel, and yourself?
I'm great, Mutisunge. Good to have you this week. Let's first discuss the memo from State House regarding the appointment of Bank of Zambia Deputy Governor for Operations, Dr. Francis Chipimo, as acting governor. Much as the memo was clear in that Mr. Mvunga's appointment is waiting ratification from Parliament, it still brought out a lot of questions, Mutisunge. How would you interpret this memo by yourself?
Thanks, Joella, for that question. So, look, there's nothing very surprising about that announcement, especially that the air had to be cleared. And I think it's a statement coming from the authorities to symbolize that there's still leadership at the central bank, because there's been this noise around the termination of Dr. Danny Kalyalia's contract and the appointment of the new governor, who's Mr. Christopher Mvunga. So clearly, what we see is the world has received this news with mixed feelings, and there's been concerns around whether central bank independence exists and what monetary policy stance would be going forward. And it's very, very clear that it's a signal that is being sent to show that there's leadership still, even as Parliament does ratify, awaits that ratification of Christopher Mvunga. Parliament opens on the 11th of September. But at the same time, it's not a shocker, because in the absence of the governor, the deputy governor operations does hold mantle, especially that under operations is where you find things like monetary policy. So it is very highly likely that the deputy governor operations already knew that he was going to take mantle between now and the time that ratification does take place. But to clear the air, all that controversy and uncertainty around in the markets, knowing, say, what's the policy direction, there had to be that announcement, and it was very strategic, and it's actually a good thing to calm markets.
So you recently authored a piece on excess liquidity in the Zambian market, yet credit risks are rising. What is driving credit risks, and how best can we address this?
Okay, so you look, Joella, we are in a disease pandemic era, and this is a health issue, and you can't sort out a health issue by throwing money at it. Of course, yes, if you throw money to a health issue, you should be able to, support vaccines and things like that. But then effects on the economy, liquidity, you can throw as much liquidity as you want to, in the economy through open market operations, but credit risks are coming from a deterioration in your fiscal profile that's sovereign risk related, that's causing impairments. But at the same time, look at what disease pandemic has done. Even if you do throw liquidity around, it's not everybody that is going to get that liquidity, and businesses are already hurt. I would like to liken businesses to human beings. Once a human being dies, you can't bring them back to life. Same applies to business. It's a legal persona. Once it dies, it's very difficult. Not even liquidity will. So you'd find that COVID has priced into the business ecosystem. There's been wage cuts, there's been supply disruptions. It's very hard, and there's what you call malinvestment at the same time. So because you have so much liquidity around, there's cheap credit lying around, and businesses are prone to actually even become very debt-laden because you have so much cash that is, flowing around. And that's one deliverable that the new substantive governor should be looking at addressing, to say, yes, yes, of course, liquidity will absorb some credit-related and induced credit risks. But at the same time, he should be thinking of ways of alleviating credit risk, because you see, it's the private sector that drives this economy. And if you have more private sector entities then going down, then the economy could be doomed. And that's a deliverable for the new governor. And this is something that, the market is looking to him to provide guidance in terms of credit risk cushioning.
You have mentioned that liquidity is not working. I know in the States, the government actually has been recapitalizing companies just at the brink of going under. Would you say it's the best, mode here in Zambia if we have government's will to capitalize some companies?
Well, I'd say yes and no. Compared to the US is a bigger economy, we're a smaller economy, and look, the businesses in the US are massive, such that one airline crashing would just, cripple the S&P 500 and things like that. But the US has muscle to capitalize. So you'd find that a capital injection is slightly different to just getting liquidity as a loan, because once you get a capital injection, it could actually be swapped with equity. So what the governments in the US do is they help entities like, say, an airline that is ailing, but then they exchange that with equity and say, when you pay us back this money that we've injected, then we'll give you back your equity and things like that. And you'd see that in the financial crisis, that's exactly what worked. But throwing liquidity, I know the markets are cash flush. If you look at what the central bank has done, it's a good thing. I'm not saying liquidity is a bad thing. but it's not sustainable, because the question is, how much liquidity are you going to throw to the market? How much money will you print in terms of quantitative easing? Because then you have to worry about inflation. So it's a big quagmire. It's not just Zambia, it's a quagmire, and it's a problem for most central bank governors across the world right now, because now they're really scratching their heads as to how exactly would they help businesses then get back to, to firing on all six cylinders. So it's just what it is.
Yeah,
it's a tricky spot.
Yeah, Mutisunge, locally, how
Yeah.
has the local currency performed today against major currencies, and what is your forecast for the week?
So I'll tell you that the kwacha has continued on a losing streak. I think between 1938 and 75, and mid-rate right about 19.6. So you'd see that demand has continued in the markets. And like I did say earlier in my other analysis, is that when you start seeing the currency depreciate, you must link it to economic activity, because then you have players that you've given liquidity, you've dismantled arrears, you've given them cash, and now they want dollars because you're a net importer.
Yeah.
The biggest mistake that we ever make in this economy is when you see a stable currency, you think the economy is performing well and you proxy that for growth. No. Net import means you have to buy dollars, you have to import your equipment, and because that demand is up, that's what puts putting pressure on your currency. But there's one thing that we're forgetting. We are low on reserves. The central bank doesn't have the luxury of selling dollars on the open markets, and that's the reason why your currency has run away. If the central bank had reserves and they were selling dollars on the open market sustainably, I don't think any of us would be worrying about the situation that we have. FISP has come 2 months early. There's demand that is kicking in dollars for fertilizer. At the same time, you've got petroleum demand, and we pretty much import everything. So the currency depreciation is trying to tell us something. Markets just do not lie. So let's listen to what the markets are saying. There's excess dollar demand because this economy is trying to grow. Economic activity is kicking up. So we're where we are. And it's another deliverable again for the new governor, because now he's coming at a time when he has to sort out this currency route, and it's going to be a headache. So it's not going to be an easy ride. I mean, he's got credit, what mentioned, and then on the other end, we're talking about exchange rate. So it's tough.
Yeah, Mutisunge, and I'm sure it would be nice to just let us in how the other emerging currencies are performing. Is it just the kwacha that is in a downturn, or if you compare it to other African countries or currencies?
So you see that for other African countries, most African nations have actually taken a beating. It's just that we are the worst beaten of all the other African currencies. And you would see that it's because of the stronger dollar. At some point, this dollar was very strong because liquidity was finding itself in safe haven. And the dollar is a safe haven currency. They were buying US treasuries. They were buying gold and silver, which is precious metals. And by default, when the dollar strengthens, it takes away parity gains from other currencies, and emerging markets then take a beating. If you look at emerging market currencies, the Brazilian real as well, similar to the kwacha, has also taken a knock. So you can see what a health issue, disease pandemic, has then hit the economy through social distancing, reduced interactions, and is now pricing into the commerce business ecosystem. Business fabric is down, and it's just causing that dislocation that we are seeing, and it's manifesting in the markets. It's just everywhere, and that's why this world is set to recede. The world needs to flush out COVID, or else we'll continue seeing currencies tank like this.
Yeah, Mutisunge. Finally, Mutisunge, the US Fed Chairman Jerome Powell, in his message at the Jackson Hole Central Bank Governors Virtual Meeting, announced a big shift on US monetary policy by letting their inflation, trade levels higher than what has been their target of 2% for many years. What does this mean, and how have the markets worldwide reacted to this?
So in a nutshell, that meeting at Jackson Hole last week, Thursday, was merely changing the model that they've always used. They've used the Phillips curve. The Phillips curve is an economic theory that assesses the relationship between unemployment and inflation. And if you notice that is what they've used for monetary policy for a very long time. So if you look at some of the things that Donald Trump has achieved, he managed to get unemployment to 50-year lows. He was the first president in the history of the US, but came COVID. COVID has actually unrolled everything. So if you look at things like your inflation, so what the Fed is doing is it's putting away economic theory, it's putting away the Phillips curve. What they're going to worry about now is employment, getting employment back, because now they know that historically speaking, they saw unemployment at 50-year low, and inflation was right below 2%. So they're not going to worry about inflation anymore. They're going to target the labor market. And when they target the labor market, they're giving hope to the US to grow and to recoup and claw back all that lost growth. This was very much well received by the markets that we're pricing in. If I look at my base metals, they were all jumping. Copper was up, right, trading for $6,700 a metric ton. Crude jumped, was $46 a barrel. And there is hope that I wouldn't say a V-shape, but a W-shaped recovery is actually on track. And then the central bank also, pledged to throw whatever tools they have to make sure that the US economy gets back to where it is. And I'll tell you one thing, that markets would have rallied higher, except for the news that has just come in that the COVID vaccine from Russia and China would have shortcomings. And that's not very good news, because part of the rally we've seen in the stock markets was supported by the fact that we have made significant steps towards a vaccine. But in terms of the dollar is weak, DXY is 92.1. A weak dollar means that demand for riskier assets is actually ticking up, which is a good thing because the economy is reopening. But at the same time, gold is shy of $2,000 an ounce, and silver jumped 1.9% and is trading for $28 an ounce. So we're still in the COVID-driven information era, because much of the rally that we're seeing usually is, as a result of vaccine news. But then COVID cases are still 25.2 million. And we see the likes of India. India has actually receded. India receded about 27% in Q2, the third worst hit economy in the world. So you can see that it needs to flush out, or else we'll still grapple with this. And lastly, we see very positive data out of China in terms of manufacturing and non-manufacturing purchasing managers index from the National Bureau of Statistics, which is above 50. So China is ahead of the curve. I wouldn't be shocked if China does grow 2 to 3% against that estimate of 1%, because they seem to have dealt with COVID earlier than everyone else in this world.
Right. Mutisunge, always a pleasure to have you on our Money Watch. Have a good evening.
Good evening, Yoela. Thank you.
All right.